In this presentation, we will go over an outline of the service we provide, going over the broad steps that we would go through with a customer file as we enter the data into the QuickBooks system and provide the reports from it. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We're proposing a cash basis bookkeeping system, and what we're doing here is just entering transactions based on the bank statement. So what we will do is get the bank statement in some format from the client, or if it's our own books, we will have the bank statement that will be provided typically at the end of the month, but not always at the end of the month. Depends on the bank that we are using, but we'll typically have at the end of each month, and it will have a definite ending time period. So we will then have definite transactions that will stop at the beginning, or start at the beginning and stop at the end of a definite time period, and we can then take those transactions and enter that into our system. We're going to reconcile the bank statements once we do so. The reconciliation process isn't going to give us as much verification as it would for a full service bookkeeping process because we won't have outstanding checks and deposits, but it will give us verification that we have entered this information into the system correctly. So our normal process will be we get the bank statements from the customers. Those are directly from the bank. We enter those bank statements data, deposits, and checks directly into the system, which would be a cash basis process. And then we reconcile the bank statements in the QuickBooks system to better verify that we don't have a data entry error as we have entered the data. We'll now go through the process of entering the data for a new customer. So if we had a new client and we're just going to start this process of entering the data, we would first then start a new QuickBooks file. This is after we've done the negotiation in terms of an engagement letter and all that kind of business, which we'll discuss at a later time. The actual data input into the QuickBooks system will typically start with, for the first month, the starting of a new QuickBooks file. We'll make the QuickBooks file. We will then create a chart of accounts based on the industry within QuickBooks. We're then going to enter the transactions each month from the bank statement. So we'll get the bank statement from the customer, use that, or the client, and use that to enter into QuickBooks the deposits and all the checks and outflows and inflows. Then we'll reconcile the checking account in the QuickBooks system to provide assurance. Then we'll provide monthly reports to the client. Let's break that out in a little bit more detail. So first we'll start the new company file. So once we actually have an agreement and we know what we're going to do with the client, we've agreed to do work for the client, we will start a new company file for the client within QuickBooks. We're going to use QuickBooks Pro in order to do that typically. The reason being is because QuickBooks Pro allows us to have multiple files, meaning QuickBooks Desktop versus the online will allow us to have multiple client files. So if we are working with multiple clients, it might be cheaper and easier to use the desktop version, and it doesn't even have to be the modern or most current version in order to enter this data. The whatever QuickBooks version we have in order to enter the data in the system we're proposing, older versions should be sufficient in order to do that. There are some qualifications and things we need to be careful of when using older software, so we want to discuss those items, and we'll look at those a little bit later. But just note that the desktop version allows us to just have the software on our desktop and start a new company file for any new company. So just the client name is needed. So that what we're going to enter into the data, we don't really need a lot of detail on this format because what we're really doing is trying to give information, compile the information from the bank statements in a way that's relevant typically for an income statement. So we don't need a lot of data in order to create the company file. We can get started, get rolling with just the client name and the industry. We need to have the industry because that'll help us to generate the chart of accounts. Next thing we'll do is create the chart of accounts based on the industry. Now I'm going to say create it, but really the system does this for us, meaning once we choose the type of industry that they're in, if they say that they're in a particular industry, some kind of like a medical industry or service industry or some type of industry that has the inventory in it, QuickBooks will generate the chart of accounts and it'll give us these accounts and it'll actually assign the account types. And so even if we don't really know how the account types work or why they're assigned in this format, If we just stick to the chart of accounts that is given to us, then those are usually kind of the defaults for that industry. And most of the transactions that we will have then will fall in to these defaults. So what we want to do going forward then is pick the correct industry. Once done, we can enter a lot of the data and just use these accounts and not have to worry about setting up other accounts and knowing which type of account they should be. As we go through the practice problem, we'll discuss how to create accounts and when we might need to create accounts, what the account types are, and how these things are ordered and how they're used to make the financial statements. Note that we will need to make some changes to the chart of accounts, including possibly making the bank statement, but for the most part, this is all we really need to get going. So once we enter the new company file, we have the new company file, we need to make sure that we store the new company file in the proper place. We'll talk about that as we go through the example problem. And then once we have the chart of accounts, we're really ready at that point to actually start entering data. The next step is that we're going to get the bank statement from the customer. Now, customers may try to give us like a bank feed or just a list of transactions and this type of thing. Remember that we really want the bank statement to have the set beginning date and the set ending date. We'll talk more about this as we go through the example problem, but we should be able to get the bank statements in some format, whether it be a PDF format or some other format that we're going to get this information from. And we can then just use that to enter into the QuickBooks system. Now, we could talk about we'll talk a little bit about other ways we could do this other than manually. We can have a bank feeds, for example, or we can download files and enter it into the system. But in essence, if there's not that many transactions, even if we just enter it directly into the register, as we'll do with the example here, shouldn't be too difficult a process. And we still have really, no matter how we upload the data, we're still going to have the same type of issues of applying that data correctly. And that usually is most difficult in the first month, meaning even if we have a bank feed and we get the data downloaded or we use some other way to upload the data, once it's in the system, the real problem is to allocate it to the proper accounts. And we're still going to need to do that no matter what system we use, especially when we first start out and start up and set up the system. Once we've entered all of our information into the system, and we'll do so with like a bank register format, we'll just enter it directly into the register. So even though we'll do it with a data entry process and we'll just actually enter the data, it should go fairly quickly because we're just going to enter it directly into a register. Then we'll do the bank reconciliation, and that'll just be one more comparison reconciling our books to the bank's books. And that, because we just entered it directly from the bank, it should be completely the same, unless we made some kind of error in the data input, which is common. So the bank reconciliation is still necessary because it will help us to create and make and fix any errors, any problems that we had within the data input process. Then we can provide the financial statement reports. So what QuickBooks, of course, will be doing then is compiling this information, grouping it together based on the chart of accounts, and then be able to generate reports. The main reports that we will be generating are the balance sheet and the profit and loss or income statement. If we're doing this for smaller clients, it's very likely that they really want this compiling to happen for the profit and loss, the income statement, because that's what's going to be used at the end of the year to help do their end of the year information, including tax information and any other kind of year-end planning they need. They'll need the profit and loss or income statement to do at least the taxes. The balance sheet is the other major statement, which will be the point in time, and it's necessary, it's useful to have that. It's useful to enter this information in and know the balance sheet as we have here, because that'll give us, the balance sheet is really the double entry accounting system in process. So note that a lot of small customers, a lot of small businesses just kind of put their income statement together like on the fly or without any kind of system. They just put it together without any reconciling item, without any accounting equation or debits and credits, a double entry accounting system. And so what we're really doing here is taking the bank statement information and providing kind of that double check by having a double entry accounting system, the balance sheet basically being it, assets equal liabilities plus equity, gives us some assurance then that the information has been entered in an appropriate way, and we have the added assurance that it's been entered appropriately because we reconciled, double checked it to the bank. Again, a lot of small businesses, when they just put together an income statement for the end of the year, don't have any kind of assurance like that. They don't really understand, they don't really feel too confident about the numbers that they're putting together, and there's no double entry accounting system that helps with that assurance, and there's no reconciliation process that at least gives some assurance that the numbers on the bank statement tie out to the numbers that were put into their accounting system. So that would be the normal process that we would be looking for. Now note there could be some variations to that process that would still fit well within our system. For example, it's quite possible we enter multiple months at one time. Quite possible that at the end of the year we pick up more clients that, of course, it's getting close to tax season and they don't have their books set up. They don't have everything. So what they're going to do is say, I need someone to compile all this stuff and into an income statement so we can prepare the taxes. And that's okay. We can, at the end of the year, we could take on multiple months. We can get the whole year's worth of taxes from January to December, whatever it may be, and enter that information in for an entire year's worth of data in order to then go through the same system. So in essence, we would have the same system. We would just be doing it all in at one time. So we'd enter January into the system, the bank statement into the system, reconcile it, then enter February and reconcile it, and go forward in the same process, just all at one point in time. And then of course we would try to talk the client into, let's do this on a monthly basis going forward, rather than just having a panic at the end of the year. In essence, though, it would be the same process. We would be entering the bank statements for January, then we're going to do the bank reconciliations, then February, and then do the bank reconciliations for however many months we need to put together. And then we'll provide the monthly reports, or possibly they just want the yearly report at the end of the year after we've entered a year's worth of data, or however much data is necessary. Note that if you have a system where they have part of their books in another system in some way, and then you want to enter the books into this system, say they came in at the end of the year and we only need 3 months of data, and they say, well, we've had the rest of it entered into some other system, that could cause some complexity. We may just want to say, hey, if you want the full information, we can make 3 months of information, but then you're going to have to add them together to do a year's worth of data for the tax return. You're going to have to add up, whatever you had prior to this, the prior part of the year. We started at this point for the last 3 months, and then add them together to do the tax preparation. Or we can go back to January and do the whole process under this system. Or you can try to decide to see if you want to upload the prior data into the system, which is something you kind of want to avoid most of the time, because you'll probably be dealing with a mess of a system in the past. Our goal here is to make things as easy as possible, to draw a line and say, hey, we're going to enter the information in this format, in this fashion from here going forward. If you want to go back and look at information prior to that, then you're going to have to go to whatever the old accounting system is in order to do that. And that's usually the type of format we want to set up. Also note that what we're not doing here, we're not having a system where the client enters data and we enter data. That's not, you could set up a system like that, but that's not what we're proposing here, because that'll add a lot more complications. A lot of bookkeeping systems might be a system where the bookkeeper will assist or help the bookkeeper in order to enter transactions in more of a full service type of system. So they're trying to invoice out of the system. They're trying to track accounts receivable and accounts payable, and we go in there and make adjustments. That's typically more something that you want to do on more of a full service, or if you're doing like year-end adjustments or that kind of stuff, to enter that information. But it becomes a bit more difficult because, of course, the client, one, could be doing things that aren't quite right, or that are outside what we would expect in some way. And two, they're just going to be wanting to use the system, the QuickBooks software, for more than just the data input, and therefore they're going to be doing things that are more complicated. It won't just be a cash-based system. In other words, they're going to want to be invoicing from it, which will cause issues or problems or differentiation in terms of how the system should be done. It'll be a variation of the simplified system we're looking at. So we don't typically want the client to be working and we're working on the file. We're entering all the data from the system into our system, so it's purely a simple cash-based system. And then if the client wants other things, like to track accounts receivable or to invoice clients with a QuickBooks system, we discuss other ways to work around in order to do that. So we keep the books separate on a cash basis on the simplified system, and we can provide some of the other needs that are necessary. Now, we could provide, of course, backup files, however. So if the client may worry that if we're just giving them reports, they don't have the backup files. There's nothing wrong with us giving them the file to say, hey, if you ever leave us and you want to go somewhere else, you have the data. It's not like we're trying to compile and keep the data from you. But what we're trying to do is separate the data to keep the system clean as cash basis and easy as possible. So we can provide a backup file of QuickBooks, provide the customer with the backup file, which they could go to anybody they want and open the backup file. What we don't do is give the backup file, let the client make adjustments to it, and then put it back into our system and be working on both, have the client working on the actual data, because again, that causes some problems. Note that there could be some areas you want to do that. For example, if you work with a CPA firm and they make adjustments and you're confident that those are good and you know how they work and then you want to put them into the system, we could do that. However, note that if we're using an older version of the QuickBooks software, that's actually fine for the client because they can usually update any software. So if we were using an older version of the software, say we're using 2018 and the client has 2019, we can make a backup in 2018, give it to the client, they can update it, and it'll still be able to open it in a newer version. However, if we have a newer version, like if we had 2019 and we give it to the client and they have 2018, then they won't be able to open our backup file because we made it in 2019 software. They won't be able to open it in the older software. And so it only goes one way. And note that if we wanted to give a backup to, say, a CPA firm, and they're going to give it back to us, and we want to enter that data, then the two softwares, if we have different years, it's going to be a problem because we won't be able to retrieve the data. So, for example, if we had 2018 and the CPA firm had 2019 software, we could give them the data. They could use it to make the financial statements. But if they then want to make another copy with adjustments and give it back to us, we wouldn't be able to restore it because they had now made a backup copy and restored it to the 2019 version. And we have 2018. We wouldn't be able to adjust our books to their adjustments. So just be aware that if you want to transfer data between files, you can make a backup file for the clients. If you have older software, no problem. If you want to get more information from like a CPA firm back to our system, then the differentiation between years of software becomes more of a problem. For more accounting information and accounting courses, visit our website at accountinginstruction.info.